Advanced Lesson 1, Trading the Open, brought to you by Bear Bull Traders. This stock gapped down 16% on earnings. Don't have any bias. Watch the price action. The second 1-minute candle begins to break up above the prior candle's high. This is called a 1-minute opening range breakout, or ORB. Price begins to push up and breaks above the $26 whole number. This is also a pre-market level. Bulls are in control. The second 2-minute candle begins to break above the prior candle's high. This is called a 2-minute opening range breakout. To trade a 1-minute orb, enter as soon as the candle breaks out of the opening range, in this case, above the prior candle's high. Place your stop below the prior candle's low, VWAP, or other support resistance. For a 2-minute orb, enter as soon as the candle breaks out above the prior candle's high. Place your stop below the prior candle's low, VWAP, or any other level of support or resistance. You can also use the low of the candle where you entered. As the first 5-minute candle is about to close, let's begin watching for signals of the 5-minute ORB. Watch for a pullback. Often the price will retrace towards the VWAP or a nearby moving average. Here, this is a good entry which will reduce your risk and provide higher potential reward. The price should break out above the prior candle's body. The ORB is taking off as price regains momentum. Watch the smaller time frames. Often 5-minute ORBs are just ABCD patterns or bull flags on the 1-minute chart. Oh no, a shooting star. When appearing at the top of a trend, the long top wick indicates selling pressure. Let's review the entry and stop areas for a 5-minute ORB. You can either buy the breakout above the prior candle's body, or you can buy the pullback for a better risk to reward. Be careful since some pullbacks can lead to failed ORBs. Place your stop just below the VWAP or any other significant level of support or resistance. The stock could not catch any support at the VWAP. It also made a new 5-minute low. Looks like we have to stop out. Not all ORBs succeed. No strategy works 100% of the time. This is why we must manage risk. Take a look at the 1-minute chart. There are signs of a bounce. The hammer candle with a long bottom wick indicates buying pressure. This candle currently forming is an inverted hammer. When appearing at the bottom of a trend, it can be considered bullish. It looks like there is a battle between the bears and the bulls at the VWAP. Let's find an entry on this pullback for another long. You can choose to buy during the pullback once VWAP has confirmed as support, or you could wait for a new 1-minute high. Or you could wait for a new 2-minute high. Lastly, you could wait for the new 5-minute high. Each of these entries would utilize a similar stop, just below the VWAP or low of the prior candle. The earlier the entry, the smaller the stop. This means a higher profit potential. However, entering too soon means less confirmation. Notice the first new 1-minute high was a false signal. It occurred during lower lows. The pullback was still in progress. Some traders use the 2-minute chart to filter out this noise. The candlesticks better resemble 5-minute patterns. Congratulations, you just learned all there is to know about ABCD patterns. Let's speed up the price action and focus on finding exit signals. So far, we have yet to make a new low on the 1-minute, 2-minute, or 5-minute charts. The trend is intact with higher lows and higher highs. This line where price is touched is the 200 simple moving average. It is a significant support or resistance level. We can either expect the price to pause or reverse from here. Based on the lower lows and lower highs, this trend is falling apart. Look to partial out or exit completely. More advanced lessons are available in the Bear Bull Traders Education Center.